Hi guys, welcome to accounting again. There's a few things that I wanted to go over with you over our assignment. I'm afraid that you're having some difficulty and I just wanted to talk to you about it. I'm in student view, what you see, and I'm in our accounting class. So I'm going to go to the module, and our module is arranged so that you see everything together because I put it under the chapter, Nature of Accounting. So it's arranged by day. And another thing I wanted to point out to you is you have a textbook here that is, this is for you and this is where all your information will be in. If you will open the textbook up, and it should open by itself here. See that it opens into a PDF, and this is everything that you're going to need to know about the chapter. I'm going to flip through here. We've done forms of business organization. We have done types of business operation. Remember, we talked about service business and merchandising business. And we've been into the elements of accounting. For example, what is an asset? What is a liability? What is owner's equity? Now remember, you saw a video on this. An asset is anything that a business owns that has value. It's like a car or supplies or cash. And then liabilities are anything that is a debt owed by the business. For example, your car could be your asset, and then your car payment is your liability because it's a debt that the business owes. And then the next thing is owner's equity. And owner's equity is assets minus liabilities. It's what's left over. It's what you have left over for the business. It's also called capital. So we talked about the accounting equation. That was one of your problems that you had. And assets equals liabilities plus owner's equity. So if you have $30,000 in assets and you have $10,000 in liabilities or debts that you owe, the difference is $20,000, and that is the owner's equity in the business, or it's also called capital. Now here's the key point here. You see the little balance scale here. It always has to be in balance. Assets are on one side, and then here's your equal sign, and then liabilities plus owner's equity. So you need to know that for the last assignment that we've done. And I wanted to show you this because I want you to see that the textbook is here for your help. That is what you need. If you need to have any questions, look back into the textbook because it addresses each type of transaction. It addresses each part of the accounting equation. And I'm going to scroll down here because I want you to look at one of the financial statements, because today's or yesterday's assignment was prepare an income statement, a statement of owner's equity, and a balance sheet. And I'm going to pull this up here where you can see it a little bit better. Now, this is in your textbook. So I would open 2 tabs on your computer and have this open as your reference, because you're going to prepare an income statement first. And your income statement has revenue, and you're going to list the revenue sources. Then you list the expenses. Now notice revenue is a title here. And then you list your revenue underneath, and you put this on your blank financial statement. Then you're going to list your expenses. Notice the expenses title, and then you list all of your expenses in order. You list them here. You draw a line to show that you are going to add this up. Then you're going to say total expenses. So in this column, you will add all of these numbers and put the total here. Notice they had $4,000 in legal fees, and then they had $2,350 in expenses. So they have a net income of $1,650. So, and notice also that that is double underlined. That means that that's your final answer, and that helps your reader to see the answer to your financial statement. So this is the amount of money that the business made, the net income for the period. Now, another thing to notice is come up here at the top. You always do your income statement first. So anytime you do a financial statement, there are 3 lines that have to be at the top of the financial statement. The first line is the name of the business, and this example is Marilyn Johnson, attorney at law. The second line is income statement, because that will tell you what financial statement you are preparing. And then you have the time period underneath, and that's very important as well, because you want to know, especially if you are an investor or a creditor, you want to know the time period that this financial statement covers. So notice an income statement, and what we had said before, an income statement is like a video. It's from point A to point B. So this one is for 1 month, and it ends July 31st. So we know if it's for 1 month, it starts July 1st and it goes to July 31st. So this is all of the activity, all of the revenue and expenses for that period of time. Now, notice the next statement that you do is the statement of owner's equity. Again, you have the three lines here to identify your financial statement. The statement of owner's equity is the second statement that you prepare. Notice that it is for the same time period, because the statement of owner's equity takes into account the revenue and the expenses for that period of time. So it's like a video too. It's from point 1 to point 2. So you take, notice also the reason that you prepare the income statement first is you take the information from the income statement and it goes into the statement of owner's equity. So to prepare a statement of owner's equity, you start out with the capital account from the first day of the time period, and then net income for the month, or it would be for the quarter or for the year, whatever your statement says here. Notice your net income comes down here to this amount. Net income for the month, and then less withdrawals. Less withdrawals are anything that the owner takes out of the business for his personal use. So you would subtract that out of the equity account because that is leaving the business. So these go in the second or the first column here. You draw a line and you subtract the withdrawals from the net income. Now, if this were net loss, you would add them together. But this is, the business made money here, and then the owner took money away. So you will subtract the withdrawals from the net income, and then you have a net increase in capital here because you had more money, the business made more money than the owner took out. So you have a net increase in capital, and that will add to the beginning capital balance. So these two numbers add together, and then you have an ending capital balance for the last day of the period that you're talking about. And for this, it's a month ending July 31st. So that's your ending capital. Now, the third financial statement that you prepare is the balance sheet. And the reason it comes third is you use the ending capital will show up on your balance sheet. So you have to prepare the statement of owner's equity before you prepare the balance sheet. And again, the balance sheet has the 3 lines on the financial statement identifying it. It has the name of the business, it has the name of the financial statement, and this is a balance sheet, and it has the date it was prepared as of this day. Now, a balance sheet is different because it's like a snapshot. It's not a video camera. It is as of one point in time. So usually it is the last day of the accounting cycle. So this is July 31st. And the way the balance sheet is arranged, you list assets first, and then you list all of the assets. Then you total the assets. Notice the drawing the line that lets your reader know that this is going to be a total. And then you have total assets here. Since this is your total, you're going to double underline this number because you're finished with it. And then you will begin the next part. You have liabilities, and remember that's the debt of the business. So accounts payable is the only debt that this business has. So you're going to list it over here, but you're not drawing a line yet. Then you list owner's equity, and then you list the name of the owner and capital, and list the owner's equity. And notice this amount is the same as this one here. That's why you do the statement of owner's equity before you prepare the balance sheet. So then you're going to add liabilities and owner's equity together, and you get this number. Again, you're going to double underline because that is the final number. And the reason you do assets here and liabilities and owner's equity here is because of the accounting equation. Assets equals liabilities plus owner's equity. These two numbers here are always the same number. If they are not the same number, then you have a problem. You're out of balance somewhere and you need to go investigate your transactions. But this is how you prepare your financial statement. You always do the income statement first, then you prepare the statement of owner's equity, and then you prepare the balance sheet.